let's get into the restaurant business. First off, read this disclaimer carefully, and like, subscribe, share, and comment. We will look at a very interesting economic signals. So this is one of the economic signal portfolios. And you can see that there is some interesting movements today. We will look at what I call eating out. So let's go here. A bunch of stocks, different kinds of eating out experiences. The reason why these stocks are quite interesting, that's because of the whole pandemic situation. Because there are vaccines coming out, hence there's a very high probability that we will start to revert to the normal, or at least the new normal. Basically, people are likely to start to eat out more. Noodles and Company is providing Asian food, pretty good performance as far as the 52-week low. As far as the 52-week high, it is a bit more mediocre. But there are reasons why this one popped up on my radar. So this is the company's website, Noodles and Company. What will 2020 bring next? Free delivery. Well, still 2 months until the new year, but we're finishing out 2020 strong with free delivery on all of your favorite flavors. So here you can see that not only have they configured their business to work well during lockdowns, but they also have, dine-in experiences, catering. I mean, basically, they want you to get their food in a bunch of different ways. That's fantastic. If we read a bit about their company, so it began in 1995 with the simple concept serve fresh food fast, something that was virtually unheard of at the time. Fast forward to the present, and we're redefining the fast casual dining industry once again. So your favorite noodle dishes, salads, and soups all in one restaurant. Each dish is carefully handmade to our guests' specifications using only the freshest ingredients. And the great thing about this is that, a bunch of fast food and restaurant companies, they are making food that is, very unhealthy and is very likely to be hit very hard by all kinds of restrictions on the horizon. But Noodles and Company, they make, pretty healthy food. And that is a very good bullish thing. If you look here at the seasonality of the stock, you can see that November, it's a bit 50-50. December is usually weak. But you can see here that January and February are some of the strongest months. That's interesting. I mean, these months are on the horizon. So that is the seasonality. When we look here at the charts, long-term weekly data points, this is a bunch of data. So one of the first patterns that jumps off the chart is that we have this monstrous multi-year rounding bottom that initially turned a bit into a cup and handle, but it is an example of a failed cup and handle, because now we have this another rounding bottom in development. The good thing is that it seems like the buyers stepped in around the lows of the previous rounding bottom. That's, a bullish sign. Another thing, when we consider the algorithms, though the algorithms are going to be a bit careful with this stock because it is not like super liquid, but the algorithms will be able to tell that the rounding bottom worked out very well previously. If we measure the rounding bottom here, that was, 254%, and that definitively will skew the algos to categorize rounding bottoms on Noodles and Company as something that is bullish, meaning it is very risky to short the rounding bottom. So far, we have 135%. If we were to go up to the previous, rounding bottom, that rounding bottom high, that would be, 367%. If we measure from the current price, it would be approximately, approaching 100%. That's interesting. So the technicals are certainly here favoring a bullish lean. Let's look here at the correlation, and basically there is no correlation with the S&P 500. If we go here to the daily data points, we get this new rounding bottom in a lot more nuance, and you can see that there certainly are a lot of cycles. It goes up and down, up and down. Hence, if you are going to trade this stock, you need to be aware of the volatility. This pullback, as an example, was a whopping minus 30%. This rally here, which looks a bit small, but it actually was a whopping 67%. So this is a stock with huge moves. The moving averages are thrown around when we have these rounding bottoms, but you can see here that the 200-day and the 100-day have functioned here as, technical indicators. Also, when we look at the RSI, there is some nice interaction between oversold and overbought levels, but they are not like super reliable. So you can't be like automatically like, oh, it's overbought, hence you can short it. You need corroborating evidence with this stock. The accumulation distribution line is showing a bit weakness. I would like to see it a bit stronger. So there are some problems for a bullish thesis when it comes to that indicator. Looking at the correlation, there's a 90-ish% positive correlation here on the short time frame with the S&P 500. So the technicals are a bit of a mixed message. When we go here to the fundamentals, it's a number 3 hold, C value score, A growth and B momentum, and the VGM of A, which is, so I would say that the fundamentals here overall are bullish. Though the industry rank, it is weak, the bottom 34%. Market cap $307 million US, not a big company. If we go here to Finwiz, you can see that they have drawn in this support level and resistance levels, but the bounce of this support, though I'm not a huge fan of these diagonal support and resistance levels, because statistically speaking, they are not very reliable. If you look here at performance, 25% year to date, that's decent. If you look at the analyst price target, this is the current price, this is the price target, which means that there is a potential 32% upside. Hence, if we take the evidence together here, there are reasons to be bullish on the overall theme. Probably will get better going forward. People will be eating out. We will revert more to at least a new normal. Another thing is that the technicals, the overall big picture pattern is a rounding bottom, and that is bullish. It has also worked out in the past, which makes the probability of it working out again actually higher. So that's bullish. There were some of the, especially the accumulation, the distribution line was not really corroborating the recent rally. I would like to see that. So there is some ghosts out there, but the fundamentals again were bullish. They were actually rather bullish. The seasonality was also bullish as far as at least the new year goes. Hence, putting it together, I would lean certainly bullish for Noodles and company. And I think one of the bigger edges they have, which will become more relevant in the future, is that they produce healthy food. I think because people who have diabetes and all kinds of obesity and comorbidities, they have that because of the bad diet in the Western world and in many parts of the world. Hence, I do think that there will be escalating, hostility towards food companies that make unhealthy food. And in that situation, Noodles and company would be one of the stars. It would be the healthy alternative, which is bullish. Okay, be very careful in this market. It's a bit all over the place. And have a great day.